Get Rich Slow with John Wolf. Hey, today I'm going to talk about FHA loans, which are actually one of my favorite. So most people know about FHA loans as the loan that you get if you can't do a conventional, and sometimes it's the loan you want to do when you can do both. So let's talk about that. Watch my introduction to government loans video as a little bit of a primer. So here's the skinny on the FHA loan. One of the cool things about it is it allows lower credit people who aren't veterans to get into their first home with not very much money down. So to give you an idea, 550 is the minimum credit score for FHA. Now things do get easier as the credit score gets up to 580, 600, 620. But from 620, the loan's on easy mode. It has some fees associated with it, which make people think that they don't want to do it instead of a conventional, but let's talk about that. So FHA has a fixed monthly mortgage insurance fee that's usually 0.8%, and it has an upfront fee of 1.75% of the whole loan amount. So that is a lot of money. And conventional doesn't have either of those if you put 20% down, and if you put less than 20% down, it does have a monthly paid mortgage insurance, but it works really differently. For a conventional, it's based on your credit, how much you put down, all that stuff. For FHA, it's a flat rate. So at a lower credit score, it's way less. At a higher credit score, it actually might be more. Also, FHA, the mortgage insurance decreases the amount you pay every year. Conventional, it stays flat until you reach 78% loan to value, and then it just drops to zero. But what else is really cool is that for a conventional, if you have a bankruptcy or foreclosure, you're going to be out of conventional home buying land for 4 or 7 years. For FHA, it's 1 year or 2 years, depending on why the bankruptcy occurred. So that's pretty awesome. What I really like to talk about is buying multifamily. So it's what I use to buy a fourplex that I'm actually taking possession of today. Super excited. And because it's FHA, I was able to put just 3.5% down. That's compared to a conventional where I would have had to put down 20% or 25%. That means I was able to buy a $750,000 fourplex for a total cash necessary to close of $35,000, but my net cash to close was only about $20,000. And exactly why those numbers are different is a complicated story, but it's awesome, right? And it does have that monthly mortgage insurance, but if I compare that monthly to just the highest interest rates of conventionals and to how much more money I can have in my pocket and be able to do future deals, it's awesome. So there is some special math for fourplexes. One of the really cool things is for my transaction, if I didn't already own a home, I would have only had to have a monthly income of a little over $4,000 a month in order to have a fourplex at that price, which is crazy awesome to me. And that has a lot to do with the fact that my net payment, like the 3 rents minus the mortgage, was almost $0, which is phenomenal. Anyways, God, I love FHA. It's a great program to check out. You can do a fourplex with FHA after you own a home, but it is much easier if you don't already own a home. Another rule about FHA is you're only allowed to own one FHA loan unless you're moving more than 100 miles, and there's a bunch of other loopholes. FHA is not too different than VA in that there are a ton of rules, but there's a ton of loopholes to all of those rules. Yeah, if you have any questions, please like, share, subscribe. I'm a loan officer here in Oregon and Washington, so if you want help with your transaction, I'd love it if you think of me. Here's the info for all the legal people who need to see my license number. Have an awesome day. Bye.